Good afternoon. This is Clark Neighbors with the weekly commentary for the final week of May 2013. Feature this week was weather. Heavy rains in major portions of the Midwest, areas of Iowa seeing heavy rains, area of Illinois seeing heavy rains, thus putting a halt to what has been kind of an on and off planting season. Planning progress this past Monday was 86%. Trade looking for this upcoming week to be in the low 90 range, 90 to 92. Beans were at 44%. Trade's looking for somewhere around 55. So very limited activity this week. There has been some talk about prevent plan in some areas as we're approaching those dates. For the week, because of this weather, July corn was up 5 cents. December corn up 31. July soybeans up 35, new crop beans up 57, and July wheat up 8. So you can see because of the weather, the new crop's taking hold. That, along with some rolling going on with the front end of these markets with huge open interest in the July contracts as we go to the last trading month before delivery of those contracts. Continue to look at opportunities in this market. I'll touch on that in a second. Now, this week with the rally in the bean market, we're seeing the highest closing levels on beans we've had since early February. So the cash market's very strong. We continue to see, the spread be very volatile. The July no bean spread that a week ago traded out near $3, closed the week down near around $2 on the spread. The volatility on the new crop, old crop, corn spread, also July D's under $1 today, and some of this is due to a roll. Again, rolling those long July positions out with some of these fund rolls that started this week and will continue on over the next week or so. Technically speaking, December corn has had a nice run this week. This 570, 575 area is pretty key to watch. If we for some reason take that out, maybe this market has an upward possibility up near $5.90 to $6. In our opinion, this D's corn could be in a trading range of roughly $5 to $6 here for a period of time. Keep in mind the last time December corn traded below below $5 on any contract was back in October of 2010. So it's been nearly 3 years that December corn has been above $5. So on the way down, that will be very good support. But keep in mind here, less than 2 weeks ago, we were down just above $5.10. So potentially that is still in the eyeballs of this market, assuming we have a decent crop. Please keep in mind as the market right now focuses on domestic weather and using that as leverage to get this market to go higher, we got to remember the world supply is bigger, and we have done some pretty substantial damage to the demand structure as we go down the road. So the potential under $5 is still there in our opinion, but it may be a little ways down the road. Again, that 570 area is pretty critical in D's corn, so we're looking at this bounce right now as an opportunity to make some initial sales. One thing we continue to hear throughout the country, whether it's talking to farmers or country elevators, how little new crop has been sold. We've heard from a couple commercials that say they've bought less than 5% of the total production expected this year on new crop. And here we are, 90 to 120 days away from harvest, so that's kind of interesting when you look at it from that standpoint. So look at these opportunities, talk to your broker. May not be a bad idea to make some cash sales or use some puts to set a floor under a fair amount of this corn right now as on a scale-up basis in case this market continues to go higher because of weather, because right now that's probably the only ingredient that creates this market to give much lift, and this week has given us that opportunity. Upcoming reports to look at. June 12th we'll get a supply and demand update, and the next major report will be June 28th, which is the final acreage report, and also the stocks report, which will give us a reading of the stocks in position on the grains as of June 1st, with 1 quarter to go in this crop year. Livestock, cattle market steady this week to a little bit weaker. Light trade in the south at 124 and the north at 125. Cattle futures on the week are up about 80 cents. Hogs up about $1. Seeing a little better technical balance in both these contracts, as hogs have had a nice move over the last 30 days. Cattle has had a little bit of an uptick over the last 2 to 3 weeks. Excuse me, over the last 2 weeks. Demand structure of the cattle and or the hogs to some degree could be a little iffy as we come out of the Memorial Day weekend with such cold temperatures. Be interesting to see what kind of movement we saw as time wears on. The one last thing I'd share with you is in regards to these markets, and I'd say this more stringently on the cattle and the corn, is over the last several months this market and these downtrends have had a tendency of making the monthly highs right at the tail end or the beginning of the month, and then selling off fairly strongly into mid-month before it regains and bounces back to the beginning of the next month and so on. The issue there, though, is every monthly high is lower than the previous monthly high, and every monthly low has been lower than the previous monthly low, so the downtrend is still intact. That's why it's important to watch this corn market. If you get above 575, may take away that pattern, but keep that in mind. Here we are at the first of the month, so we'll see if that holds true again. Lastly, I'll end as we're coming and approaching the end of an era. I had the opportunity here about a week ago to go to the CME, or the Board of Trade. I hadn't been there in a couple of years, and obviously with the increasing mode of electronic trade, the pits that we're all accustomed to over the last decades, if you will, are becoming less and less and less of a function, well less than 5% of the total volume in all the ag products is done now in the pits. Walked into the floor at about 11:45 on a Thursday, and at that time there were 0 brokers, 0 traders in the wheat pit, and I think 2 in the corn pit. The only real activity you see on the floor in today's environment is in the options, because a fair amount of the options are still traded open outcry. But as a general rule, when something happens pretty major in the market, in the old days there was a lot of noise in the pits and so on, and today it's as quiet as a library to some degree. So with having said that, if you have any questions, feel free to call us at BIS Commodities. Phone number is 800-373-2525. We're on the web, biscommodities.com, and we're also using Twitter and some texting if you have interest in that. With that, have a great weekend, and we'll talk to you next week.